All right. Hello, it is Sam here. Midday here on October 5th. We got a lot of activity in the crypto sphere, so I thought we might check in on some of the coins we've been tracking recently, and see if we can learn anything from the movement we're getting today. So I'm of course going to start on Bitcoin, and this is our reference chart that we've been using over the last week or so. This is the 4 hour on Bitstamp. And just to review for anyone who might not have been watching all week, we've been kind of watching out for the possibility here that we had completed the ABC because of the good structure here, because of this very clean 5 wave sequence here, potentially ending the C wave of the ABC. You have right at the median line, right at a negative 23. So the concern was that we might now go impulsive to complete the larger A, B, come down for the C. So how do you know? Well, what we're looking for is any evidence that we've gone into some sort of impulsive or diagonal structure, and looking for a way to break it down in fives and see, okay, is that potentially an A wave or a 1 wave? Are we now going impulsive? Well, we can look here. So this was the little box that we drew a few days ago on the assumption, well, okay, we've gone to the median line, so the likely next target would be the outside edge of the median line, and then we had some structural context here as well. We had the what I've currently labeled as the A wave, that swing high as potential support, prior resistance becoming support. Then we had the moving averages here, and we had so all lined up here rather nicely. And we also had the 38.2, which is right on the 144 EMA. So you had this little cluster here. So that's why we drew the box, right? So now we look at it and say, okay, well, interestingly, we're right to script. We're right to that little pocket, that window, and right to the edge of the median line. So this is the Schiff median line, a Schiff pitchfork, which seems to be containing this just beautifully. So from here, if you're looking at the odds from the median line perspective, the probability is now that we go back to revisit the median line one more time due to this bounce. So where does that put us? Well, potentially, now that we have the bounce here at the 3.8, the first target, algo targets, will be up here at 46.77. That's the negative 23.6 off of this pull from this low to this high. So if that's our good pivot, and we don't know that it is, but if that's a hard pivot and we're now going to take out this high, well, likely target would be up here with a touch of the median line at the negative 23.6. So let's look at this, because now if we look at this on the 4 hour, this looks like a pretty clear 3-wave, which would imply an A wave, that it's corrective, right? Not impulsive, or a diagonal implying the trend has changed and we're now going to follow this that we've been cautiously watching. So let's go to a smaller time frame. Now, we had looked at this yesterday. Now here it is on the 60. So we were alert to the possibility. Let me take this off here so you can see it a little bit better. We drew this yesterday, and I'll show you how we got there. So yesterday we looked at this, and we were considering the possibility that we were coming in here to the 200 period. We had a 1, 2, 3, 4, 5. It appeared yesterday, and then we had some other support here. I think we had, if I recall, we were pulling from this low to this high of that 5-wave structure here that completed the 5th wave. See it here? 1, 2, 3, 4, 5. We complete that. So we had this little lineup right here. And the possibility was that this was an A wave, and we had right to the tick, the 618. We had this on the other side, this pull, low to high, went to the 50, to the tick, went to the negative 23. So we had a good little cluster here. So this was a potential buy here with a very tight stop, and it got a little traction, got up, I don't know, 50, $60, but then we get the rip last night, and it comes down, and if you were in it, you took, if you, what are we talking about here? So you'd be from 41.90, you stop below the 65 to 41.70, right? So I'm going to assume nobody, if you took that and if you went long there, which is a perfectly reasonable trade to be long there. If you took the stop, I'm going to assume that nobody got hurt too badly there with that close a stop. So, there you go. That's the reality of trading, right? It all lines up. Potentially it's there. You're looking for the B wave to come, and we get one more leg down. Okay, so if you're not in the market now, we have to reevaluate and say, okay, well, now what? Right, so now we can't break that into a clear 5. So now it starts to reveal itself as much more likely a 3-wave structure. So let me pull some of this off just to declutter the chart. So, you come in, you look at that, and we'll say, okay, well, now this definitely looks much more like, as we saw it on the 4-hour, that we've got an ABC and then some little corrective ABC here. And then again, we go into an ABC, which would suggest that this 3-wave structure, and, now I'm going to take that off here because that's going to confuse you. Okay, so we've come to the, if I go back to where this 5-wave sequence started, which appears to be a meaningful pivot because it contains this entire impulse wave, well, we've gone right to the 38. So if you were looking for the most common spot for a retracement to stall, particularly your first A wave, that's the likely target. The other would be you'd be expecting it to be between the 3rd and the 4th wave, and we literally split it. So right to the 382 to the tick, and then we've gotten this big reaction. So this is just how it goes when you're trading, Elliott wave structure it's always dynamic and it changes on you. So we thought we had a 5 wave and it ends up we've got, more complexity here, which probably shouldn't surprise us here, that we get an A, here's our B, here's our C. So now the question becomes, is that correction complete? And now we go off to new highs? Well, that's possible. Or what I would propose to you is more likely, considering the length of time of this impulse and this length of time, we've just put in an A wave. Right, it all lines up. There's the A wave. We'd be expecting the B, and that's why we drew this here. Even if this had been the low here, and we thought this was our A, the fact that we've come down here really doesn't change that roadmap for us. We're still expecting a B wave of sorts and a C wave that brings us down here to the 50 or to the 618. So given what we have here now, and I'll show you how we got that box from yesterday. We thought this was our low, right? This was our A low. And so I drew a box between the 50% and the 618. Drew that yesterday as a likely target had this been our A wave and we were going to go into some sort of ABC correction. Well, we pull it down here, and now that we're still in that box. We've gotten right into that box, but if you were going to change it a little bit, if you were coming in this morning, you'd draw it like that. There's your pocket between the 50 and the 618. The 65 is there as the stop reference, right? Because it's always interesting how it seems to line up with prior swings. So if you were, and again, I am not telling anyone to short that. I would not short that there. Right, I'm much like you and most people in crypto, I'm looking for long opportunities. So I guess my larger point is I would certainly not be a buyer there. Right, and I know there will be people that are looking for breakouts. Right? So that's not how I trade. That can work. That's not what I see looking here. What I see is an A wave, and now we're putting in a B. And frankly, I don't see any way for that B wave to be complete. So my expectation is that this B wave, it may end up being a little bit higher, that we're likely going to look for some sort of 3-wave structure here. This would be the most likely candidate. That we go in that direction. Let me change the color and put it on a smaller degree. So my expectation is, because this is not a 3-wave structure, which you'd expect in the B wave. That, let me put the wave on there just to make the point. My expectation is that we're going to do this, right? And it's always, it's a potential roadmap. Doesn't mean this has to happen, but it's always about playing the probabilities. The probabilities are that we've had some sort of very strong impulse reaction here. Is it a 1? Could be. Is it an A? Could be. We don't really know. We've got to see, well, we're in the likely resistance zone here. Well, what happens next? If we just keep screaming higher here and we take out that, well, then we got to reevaluate. Then perhaps this is a completed correction, 382. And, we got to consider the alternate count, which is that this is just a larger 3 wave, and all we've done is put in a 4 here, and now we're screaming off to new highs. Definitely a contender. Definitely a possibility. So, when you break it down, it's just a matter of saying, well, what's the most likely path? What's the most likely path? Right there it is on the 15-minute. This is just boom, screams higher right into the 618. That certainly doesn't look like a B wave. So, we got a couple of scenarios here that could play out. I'd be very cautious to be a buyer up here. Just my 2 cents. I know people will be looking for that to break out and go to new highs. If nothing else, if you're anxious to be a buyer, you can still trade this. With the roadmap that I'm proposing to you, you can still be looking on the long side, because if we are indeed, how to trade it safely. Well, we've hit the resistance you'd expect here. So now we're going to anticipate some sort of a retracement. So you could just trade the 50. You could just trade the 50, even though we know B waves tend to be deeper, as there's this back and forth fight for the trend. That's why you see that 3 wave in the B wave. So we're likely to get some sort of 3 wave structure here, and we'd look for symmetry there. So if you want to be a buyer and you're anxious, you're concerned about missing a big break here to new highs, well, that's how to trade it. There's your buy window right there. Now, B waves, you got to allow for a little more depth here. So, you can take that with the very tight stop on the other side of the 65. You want to give it a little more room, you got to get on the other side of the 786, because that's not unreasonable for a B wave to go that deep, because it's a push to try and get to this pivot. Right? The bullish indication is that they can't get there, and then you scream up for the C. Okay, and then in that context, that would be potentially the C wave here of this ABC. So it's unclear. Doesn't mean we can't trade it, but the longer term count remains a question mark. Doesn't mean we can't trade it. If nothing else, we can stay well within this Elliott context and just be trading fib pulls, right? Not complicated, just pulling 50s. Pulling 50s, stops on the other side of the 65. Don't overthink it. We eventually we'll be able to come back with the benefit of hindsight, and we'll count this out, and it'll make perfect sense. And we'll say, well, that's what it was. But here we're trading the right edge of the market. What do we got? We got probabilities. We got probabilities and patterns that have a tendency to repeat in the market. We see it all the time. I mean, if you follow me, you've seen it hundreds of times now. Right, which is, kind of the point here of every time we pull up a new cryptocurrency or a new chart of any type, it's the exact same approach, and that's kind of the whole point, is that you approach it the same way every time. Don't get, there's a tendency, particularly for people that are new to the markets, to be chasing the next shiny object, the next great indicator, the next hot system, the next bot. If you've been watching my videos for 2 weeks, there should be no question in your mind that this is a valid structural methodology with which to approach the market. And the overriding context is, can I find low risk, high reward entries in the market where I don't put myself in a position where any one trade hurts me and I've got excellent upside. Minimum 3 to 1. Minimum 3 to 1. We often find 5 to 1, 8 to 1, 9 to 1. It's all there. This, even if you just, if you wait for this, let's see if I can get this to come up here. If you're a buyer here, and you're going to put your stop on the other side of, there, even on the other side of the 786, that's 3.5 to 1. If you tighten it up to the 6.5 and you're a buyer at the 50, and you go to the other side of the 65, and you're just looking for this little window here, well, there's almost 4 to 1. I mean, that, it doesn't have to be, the monster home run ball every time you get in the market. Punching singles like that's how you build your account. That's how you build your account. Now, and if the thing screams off higher, you don't kick yourself, and you got to be always conscious. If you ever hear yourself saying, woulda, I shoulda, or I coulda. Right? Those are absolutely, those will eat you alive. You got to get that out of your vocabulary. If you punch out a good single here, beautiful, bank it, have a target, take the profit. What's next? Next retracement, next trade. If you get a runner, and if you take a partial profit there and then it takes off, well, good for you, right? So if nothing else, now you're on a free ride. You're trading with house money. Because I would like to think your stop would be, at the very least, be at break even. So if you got a runner and this turns into 1, 2, 3, and now it's taken off, well, you're waiting for the 4. If you've got a runner or part of your position you've let continue in the market, well, you got a couple of choices. One is to trail with a stop, right? And if we were looking for a 4, you'd be trailing that stop at the wave 1 high. Or you're looking to add, because that's when you really, really, really get the benefit of this structure. Because now you got a roadmap. So now you're waiting for the retracement so that you can load again. That's the reload, and you're reloading with house money. That's the power of it. And again, keep in mind, the roadmap that you think is unfolding is going to fake you out, and you're going to change it way more often than you're going to see it, and it's going to unfold exactly as you anticipated. That is the rarity. When you catch that, that's when you got to leverage the hell out of it. When you project the roadmap and it follows it, you take advantage of that, and you trade it aggressively until it fails, because that is the rarity. This is a good example. This is as textbook as it can get. So if you were long off of any of this, right? If you were long off of this 2 and you caught the 3, this is your reload here. This is beautiful ABC. And what do? If you were long here and you got the 2 or you waited for the 4, that's your reload. Now you've caught 2, 3, 4, and all it did was follow the most rudimentary, textbook, almost a stick figure, Elliott wave structure. It just doesn't get any. When this happens, you gotta make bank there, because you could have projected that from here. Look here. You had this beautiful 5-wave sequence here. You're anticipating the first retracement, and if you didn't catch that one, now clearly we've got a 1, 2, 3. You're waiting for the 4. You got to pull the trigger there. You just have to be aggressive there. Where's the stop? Right underneath the 6 or the wave 1 high. That's really not that far. So you don't have to put your entire account into that, but that is absolutely a trade you want to wait for. And you want to take advantage of. And look how beautifully. And if you missed that one, then you had this one. This is it doesn't get any simpler than that. There's no complexity in that wave count. That is a simple trend in 5s, correct in 3s. And that's what we're trying to figure out here. We're just trying to continue the process, right? We trade it until it fails. Well, here's a 3-wave. Okay, well that's a big clue. If that's an A wave, what are we expecting? We're just looking for the next 50. With a tight stop. You get stopped out? Okay. Well, then what is it? Well, maybe this is we don't know. We don't have enough information to quantify this. That could be an X wave. ABC, X, ABC. It could be a number of different things. We don't have enough information. But until we are proven otherwise, you take that trade, especially if you want to be a buyer. If you're looking for the long side in Bitcoin, there's simply no reason not to take that trade. I mean, you can put, from 42.40, you want to be on the other side of the 65. That's a $40 stop. Now, granted, some of you are trading with leverage. You're going to put more size into. I'm not saying you put one Bitcoin in there and then you're going to trade for $40. It's all relative to the individual, your account size, your risk tolerance. You know what I'm saying. My point being, that's a trade you take. You wait for that. You don't let that slip you by. I'm not saying load up and that's going to be a winner. I'm saying the probability is there, the risk reward is there. When the market gives you that, you take the trade. That's trading right there. Low risk, 4-to-1 reward, potential for new highs. If you don't take that, what trade are you waiting for? Please send it to me, because if you've got a better trade than that, I want to know about it. All right, I get on my soapbox here. All right, that's 21 minutes. I like to keep these short. I've got some other markets I want to show you, so I'll be back with another video later in the day. All right, guys, that's it for now.